Navigating today's financial news sometimes feels like you're trying to spot a rare bird in this incredibly dense forest. There's just so much noise, right? Headlines, earnings reports, analyst notes, trying to figure out the real story. It can be a lot. So, welcome to the deep dive. We try to cut through all that noise and make these complex topics, well, easy to follow along. The idea is you can walk away well informed pretty quickly. Today, we're diving deep into Alibaba's Q1 FY26 earnings. We've pulled together a whole stack of sources, stuff from Reuters, Barron's, insights from Investors, NASDAQ, A-Invest, ETF database, even stocks to trade. We've curated them to sort of pull out the most important nuggets for you. Our mission, really, is to get behind the numbers. How did this tech giant actually do last quarter? And, what does it signal for their future? Because I have to say, this report is a really fascinating balancing act. You've got some clear wins, definitely some challenges, and then a few signals that are, well, let's just say they're a bit of a mixed bag. We're going to break it all down for you right now.
Yeah, that complexity is exactly what makes this one interesting. I mean, for a company the size of Alibaba, with all its different parts, it's never just one simple story, is it? And this quarter particularly really highlights how different segments of their business can be pulling in, well, completely different directions.
Absolutely. And some of those directions are definitely pointing up. Let's start with the good stuff, where Alibaba really shined. They posted some seriously impressive profit numbers.
Right.
We're talking a net profit of $5.9 billion. That's a 76% increase year over year.
Yeah, that's huge.
It's not just a little bump. For a company this size, that's a massive leap. So what was behind such a big jump on the bottom line?
That's the key question, isn't it? And our sources like Barron's and Reuters, they're pretty clear. A big chunk of this profit surge came from strategic portfolio moves, specifically gains they made from investments, and also the big sale of Trendyol, their Turkish e-commerce platform. So what this really shows is Alibaba being quite savvy strategically. They're not just looking at operational growth. They're actively managing their assets, making these smart divestments that unlock serious value and, boost their financial health. It shows a pretty mature approach to managing capital.
Okay, that makes sense. And speaking of being strategic, their cloud intelligence division seems to be doing really well too.
Oh, yeah.
That segment was a real standout, right? A 26% year-over-year revenue gain. That feels, I don't know, powerful in today's tech world.
It really is.
What's the story behind that number? How does it position them?
Well, the core story here, according to Investors and Reuters, is that this cloud growth, it's fundamentally driven by the huge demand for AI.
AI again.
Exactly. AI is now contributing significantly to their external cloud revenues. So this isn't just generic cloud adoption. It's about Alibaba making an early, pretty aggressive move into AI infrastructure. It puts them right in the middle of one of the fastest growing tech sectors globally. It really shows they had foresight about where the market was going, and crucially, they could execute on it.
Right. It's a big bet paying off.
It's definitely a testament to their long-term investment in that cutting-edge tech.
And building on that AI focus, they also launched a new AI chip this quarter. That feels significant.
Very significant.
How much of that is just about the tech, the innovation, and how much is it, a strategic calculation given everything happening globally with chips and restrictions?
It's definitely both, but there's a very strong strategic element here. As Barron's and Investors point out, launching this chip is a clear move towards independence.
Independence from NVIDIA, presumably.
It's exactly. Especially with the ongoing U.S. restrictions. What this signals is Alibaba's long-term goal for self-sufficiency, for innovation in this critical area. Think of it like they want to control their own AI destiny, right? From the chips themselves all the way up the stack to the cloud services. It's a pretty bold statement that they intend to be a major player, not just a buyer, of advanced AI tech.
And investors certainly seem to like these bright spots. Alibaba got named IBD's stock of the day.
Yeah, Investors Business Daily. That's a nice nod.
And the stock itself jumped quite a bit after the earnings, didn't it? Somewhere between, 6.8%, maybe even 14% on the day.
That immediate positive reaction from the market, which investors and stocks to trade reported on, it tells you something important. It shows investors are really buying into specific parts of this report, especially that AI hardware push and the strong cloud growth.
Right.
It signals that the market sees these strategic moves, these investments in AI, as key drivers of future value, and they're willing to reward that vision right now.
Okay, so those are some undeniable wins, pretty compelling stuff. But like we said at the start, this is a balancing act. While the bottom line, the profit, looked great. The top line, revenue, told a bit of a different story. Alibaba actually missed revenue expectations this quarter.
Yeah, and that's a crucial point. For a company like Alibaba, so heavily reliant on e-commerce, a revenue miss always gets attention.
Yeah.
They reported 247.65 billion yuan, but analysts were looking for closer to 252.9 billion yuan, according to Reuters and ETF database.
So, a noticeable miss.
Definitely. And while profits were boosted by those asset sales we talked about, this revenue shortfall isn't just a number. It kind of points to pressure on their core business growth. It suggests that even stellar performance in cloud and AI can't completely make up for challenges in their traditional revenue streams. Well, not yet anyway.
Okay.
It's a direct signal about where the main growth engines maybe aren't firing on all cylinders right now.
And it wasn't just the top line revenue miss. Margins were also feeling the squeeze. Operating income actually fell 3%, and adjusted EBITDA, that's earnings before interest, taxes, and amortization, dropped by a pretty significant 14%.
Yeah, 14% is quite a dip.
So how do we square that with those really strong net profits?
Well, this drop, which raters and investors pinned primarily on rising investments in things like instant commerce and these really intense price wars, especially in food delivery, it shows a strategic trade-off happening.
Okay.
Alibaba is spending aggressively, investing heavily to either defend their market share or try to grow it in these super competitive, often lower margin businesses.
Right, like food delivery, very tough market.
Exactly. So while they're pulling in impressive net profits from selling assets, the day-to-day operational battle in some key segments is actually eating into their operating margins. It's kind of like, running a race where you're sprinting ahead in some parts, but using up a ton of energy just to hold your position in others.
That's a good analogy. And speaking of those traditional core businesses, their main China e-commerce arm, Taobao and Tmall, grew by only 10%.
Relatively mild, yeah.
Especially when you compare it to that 26% growth in the cloud division. It makes me wonder, what does this tell us about the average Chinese consumer right now? Their spending habits. Is this a permanent shift, maybe, in where Alibaba gets its strength, or is it just a temporary slow patch?
That 10% figure for domestic e-commerce, which Reuters and investors noted, it definitely suggests that consumer rebound inside China is maybe slower than a lot of people are hoping for.
Yeah.
It implies that while Alibaba is doing great things in tech infrastructure and strategic sales, the everyday consumer spending that's historically been the bedrock of their business isn't quite as strong. So what it tells us is that those broader economic headwinds, plus changing consumer tastes and really fierce competition from rivals like JD.com and PDD Holdings.
Oh, Pinduoduo.
Exactly. All that is creating a tougher environment for their main retail operations. It's a really important signal about the overall economic feeling within China and how it's impacting the very foundation of Alibaba's empire.
So, okay, we've got this really stark contrast then. Soaring profits, amazing growth in cloud and AI on one side, but then revenue misses, pressure on margins, and this kind of lukewarm e-commerce performance on the other. This complex mix of good and, well, challenging news is where the picture gets really interesting, isn't it? Revealing those kind of mixed signals for Alibaba's future.
Precisely. Despite the strong cloud results and all the excitement around their AI chips, that revenue miss, which Reuters and A Invest highlighted, it just serves as this stark reminder of the ongoing macro headwinds. We're talking about, persistent weak consumer sentiment, intense competition.
Yeah.
And while, look, no company is immune to these bigger forces, Alibaba's position is unique. They're deeply tied to Chinese consumer spending, but they're also betting big on global AI infrastructure. That creates this inherent tension, and this quarter really shows how those two forces can pull in opposite directions.
It also creates this really interesting tension between how the market reacts immediately versus the longer-term analytical view, doesn't it?
Absolutely.
Like you said, traders got excited about the AI hardware, pushed the stock up, but then you read the analyst notes, and some are sounding a clear note of caution.
That tension is really palpable.
Yeah.
And it's a great example of how different people in the market can look at the same set of data and interpret it differently. As investors in the ETF database point out, yeah, the immediate reaction was positive, driven by the exciting AI news. But some analysts are worried that this sluggish consumer recovery could stick around.
Right, potentially dampening things later on.
Exactly. It could temper optimism down the line. So for you, the listener, this really illustrates the difference between that immediate market sentiment, often driven by one exciting headline, and the more measured, long-term view that considers the whole picture, all the economic and competitive factors. It's about separating the signal from the noise, right? And sometimes that noise can be pretty loud.
Okay, so With all these different pieces moving, the wins, the stumbles, these more nuanced signals, what are the analysts actually saying about Alibaba's path forward over the next few years? Let's maybe dive into their perspectives. How about the bullish view first?
Sure. The bullish camp, and you see this reflected in sources like NASDAQ, investors, and Barron's, they really continue to praise Alibaba's AI and cloud strategy.
Yeah.
They see the chip push as a really strong long-term growth engine. They're looking at substantial upside potential, stock targets, momentum models. They're pointing towards pretty positive trajectories.
Okay.
This view is really based on the idea that these strategic investments in future tech will fundamentally reshape Alibaba's business and where its revenue comes from, maybe making them less dependent on that traditional e-commerce cycle.
Got it. And then there's the view that's maybe more cautiously optimistic, the one striking more of a balance.
That's right. While there's definite optimism about the long-term gains from AI, sources like investors and A-investors also urge a bit of caution. They emphasize that near-term growth is still going to heavily depend on getting a stronger recovery in retail and also getting better control over margins in those competitive segments we talked about.
Right, the instant commerce, food delivery areas.
Exactly. It's a more pragmatic take. It acknowledges the huge potential in the new stuff, the innovation, but also recognizes the current challenges and the need for those core businesses to find their footing again. They're basically saying, great vision for the future, but we also need to see solid execution in the tough day-to-day markets.
But overall, if you zoom out a bit, the fundamental picture for Alibaba, looking longer term, still seems pretty positive, right? Especially according to those forecasts.
Absolutely. The forecast models generally anticipate steady growth. Analysts are expecting mid-single-digit compound annual growth rate for revenue, so AGR, and strong EBITDA growth out through 2028, according to NASDAQ. And what's also interesting is that the company's valuation still looks pretty favorable compared to its competitors. So this suggests that even with this mixed quarter, the underlying health and the long-term potential of Alibaba are still viewed positively by many. The market seems to be giving them credit for that strategic pivot towards AI and cloud, but it's also clear the road ahead isn't perfectly smooth. There are still challenges to navigate.
So there you have it. Alibaba's Q1 FY26. In all its complexity, it really was a mixed report, wasn't it? You had that powerful profitability, clear progress in AI and cloud, but then nicely balanced, you could say, by the softer revenue and that undeniable pressure on margins.
Yeah, the key takeaway, I think, is that while analysts are definitely optimistic about the big, bold AI and infrastructure strategy, the broader recovery in consumer demand, both in China and internationally, that's going to be absolutely critical for sustaining momentum and making sure those foundational businesses are really contributing meaningfully to long-term growth.
It really makes you think, though, doesn't it? As these tech giants pour massive amounts of money and resources into the future, into AI, advanced chips,
Yeah.
how much will their ultimate success still depend on just, everyday consumer spending, on consumer confidence around the world? It brings up this important question. Can that kind of groundbreaking innovation alone carry a company to totally new heights? Or is the foundation always ultimately laid by a confident consumer who's willing to spend? Something to definitely ponder as you watch the markets. Okay, that's all the time we have for this deep dive. We really hope we've helped make sense of Alibaba's dynamic balancing act, made it a little easier to follow along for you. Until next time.